Hey, good morning, folks, and welcome to Swing Trading Today. It is October the 11th, Friday. Happy Friday to you. This is day 11 of Sober October. I'm still down over 6 pounds, but I actually put on 2 ounces. Looking at the weekend, it's going to stink. No Friday cocktail, no cigar over the weekend, but we'll get through it. All right, so let's talk about last night. I want to thank everybody that joined in on the TrendSpider webinar. It was a great time. We went over a bunch of charts. We demonstrated how TrendSpider works from how I use it. TrendSpider is automated technical analysis. I believe it's a time saver, a very, very, very valuable tool, used in conjunction with other charting software, as I do right now. And it's just a great way of setting alerts, being disciplined, and getting away from the computer and focusing more on what you do, which is your day job. And by setting the alerts, you focus on that job rather than staring at the computer, at quotes, whatnot. Let the computer, let the program do the work for you. And that's what we discussed last night. If you're interested in their product, visit their website, use the link below, and click discount code CT25Z. If it appeals to you, again, CT25Z, that gets you a 25% discount off of their product. All right, so let's, as people are populating, let's go walk through the pre-market activity, because it's quite bullish on the equity front, a little waffly here on the currency front, meaning the US dollar. And then we're going to segue into a bit of news. Then we'll talk about a couple of stocks that we're watching. But tomorrow, or actually, tomorrow is Saturday, and I will be sending out the week ahead commentary with members. And what we do there, good morning. I'm sorry to hear you're jobless. That stinks. Sorry about that. DAX went up last night? Good, because it's reflecting here in the States. Hey, Trent. So tomorrow I'll be sending out the week ahead commentary to members. That's where we review the health of the overall market. What did we do this past week? What are we going to do the following week in terms of strategy? Now, this week, we were buying stocks. For the first time in weeks, hey, good morning, Patrick. Good morning. We were buying stocks. We were buying the small caps. We did do some covered call selling. I even discussed this last night on TrendSpider, because there's a lot of congestion above on NUGT. You're seeing it spike up this morning in the pre-market. We may get called out of some covered calls that we sold, the 3250 strikes. They're expiring today. We opened up I'm going to go over a little bit of resistance regarding a bull run into next week in a moment. I was looking at the charts earlier because I don't sleep. We were talking about a little bit of resistance on, not a little bit of resistance, selling covered calls on NUGT. And I sold some additional covered calls yesterday, going out into next week at the 35.50 strike price. They'll expire next Friday. We're bringing in some income because we are in a trading range. Myrtle Beach, nice. That's nice to hear. Thanks, Patrick. That makes me feel good. Safe drive, please. Enjoy the time down there. Beautiful area. We also opened up a new position in Angie's List, ANGI. That spiked in the after hours last night. Let's see whether or not we get follow through today on that position. There are a lot of shorts attempting to cover their positions. So we were stopped out, I guess, 3 weeks ago. And thank goodness that we did, because it just kept going lower. But we are now back in. We had the wash sale rule that appeared on that trade, so we didn't make it through that 30-day period of being able to take advantage of the tax advantages. but all right, oh well. So we're back in on Angie's list as well. So we're going to plan on adding more on strength to the small caps. So before we move into the charts, if I can ask you too, a couple of you already did it. Thank you so much. Smash that like button, kill it, give it a Friday hammer, and subscribe to the channel if you haven't already done so. The goal is 2,000 subscribers on YouTube by the end of the year, December the 31st. That'll be a great Christmas present. I have a survey below in the description area. If you can take that survey, brief 2-minute survey, if you haven't already done so, and I don't want anybody's personal information. It's totally anonymous, and it'll take about 2 minutes. If you already took it, thank you very much. I appreciate it. Great feedback, and I'm already starting to tailor my scope of conversation around the feedback because it's been very good. As I'm speaking right now, I'm watching the dollar break. This is a 4-hour chart. These will all be 4-hour charts, and we are breaking here rather significantly on the dollar. We were holding support here on, what's the low of yesterday? 98.63, and that was support back here. On the 3rd, it was support here, and we have now failed. It looks as though the dollar is going to press lower. Now, to be fair, this bar just opened up. We have 4 more hours to go. It's only 6 minutes into this bar. A lot can happen. Thank you for those likes. I really appreciate it. Thank you. So I fully expect that in all probability that we are going to come down here. We're going to retest what should be now support on the dollar. And I'm going to go over the reason why the dollar is important right now immediately after this observation, and that is we broke out here on the 20th of September, failed, rallied through yet again on the 25th, and it appears as though we have a good chance of failing yet again on the dollar. And take note of the weakness that we're seeing on RSI. I mean, really, really weak. We're at 32.20. You know, they use technical analysis for dummies and all these guys that go onto TV and they say, oh, RSI down below 30, you got to buy. Ridiculous. You will go broke. Backtest that strategy. I dare them to backtest that strategy live. It's an absolute failure. This RSI is probably going lower. It should be sold. This is very, very weak. Don't listen to that rule of thumb about RSI. It's complete hogwash. I've disproven it time and time again. So RSI down below 30, avoid. It gets weaker. Now, why is a weak dollar good for us? It's good for us because we are long of the gold miners. Now, they're not open right now. The GDM may be, but let's just take a look at gold because they pretty much trade in tandem. Gold is off the highs of the session. No breakout here. So we're looking for a breakout on gold. It's been a little bit iffy. We're not seeing the follow through on gold as one might expect with all of the QE that's being injected into the economy. The fact that we're bailing out banks yet again, circa 2007, 2008. I'm going to bring up an article with regard to the Federal Reserve and their accommodation of Deutsche Bank, a German bank, one of the largest banks in the world, and we're accommodating them to avoid them going out of business. Go figure. Yet again, we're bankrupt and we're bailing out one of the largest banks in the world and putting our own system at risk. Ticks me off. Let's take a look at other commodities. Oil. Good. I'm glad you appreciate it. Thank you. Oil. Moving up higher. Good stuff here on oil. We're a bit overbought relative to the third standard deviation Bollinger Band. So we'll probably pull back. sometime this morning. No rush here. Now, copper, we would talk. Whoa, look at copper. Copper is ripping. We recaptured a support level. Not only do we recapture it, we did a pullback and a retest on copper, and we are now pushing higher above this prior 4-hour bar. Now, again, you're seeing shorts get squeezed here. How do I know? It's because we're spending a lot of time above this third standard deviation Bollinger Band. In short, if you're not familiar with the technicals behind it, we're not supposed to be here on a normalized basis. What's our normalized time frame? This blue 20-period moving average. So we're extended here. May we push higher? It all depends upon the level of short interest, but copper is looking net pretty good. Out of curiosity, I don't plan on buying copper. It's really just an ability for me to divine the health of the global economy and where we may be going short term. And it's all about cheap money. Weekly chart, we're at current above weekly resistance. The question is, do we close there? But at current, this is looking pretty good. And if you're not familiar with copper, copper is a leading indicator about the global health of the economy. It goes into everything, semiconductors, everything. And we are pushing higher this morning. And it looks as though the heroin that the Federal Reserve and the central banks around the world are injecting into the global economy is beginning to work. Now, that does not mean that our problems are solved here. It just means that they're getting worse. And the day of reckoning is not going to be nice. It's going to be absolutely horrible. Zimbabwe inflation, like horrible. Zimbabwe's inflation, that hyperinflation, just resumed yet again. All right, so we're breaking out here with higher lows on RSI weekly basis. So Dr. Copper looking really good. Let's watch for a close above resistance. Now, back to the 4-hour chart. We were talking about soybeans yesterday. Again, I don't plan on buying soybeans. For those that are new to watching me, I look at it as a leading indicator to debunk the headlines. And why is that? Well, you could argue that you're going to get snowstorms in the Midwest driving soybean prices higher. Fair point. But I would also look at it as an indicator of as to, are the headlines that we're seeing so negative on the Chinese trade front really that negative? I don't think so. We were getting negative headlines out of the Chinese trade talks, yet soybean prices have been moving higher. Remember, we have tariffs on soybeans out of China. What are soybean prices doing for the past several weeks? They're moving higher. Higher lows threatening to break out here, just like copper. So it looks as though the background Iran tanker hit by missiles? I didn't see that. I didn't even see that this morning. When did that happen? Not a couple of weeks ago. Is this just overnight? There's a lag here, so I'll wait for the answer. So soybeans are looking very, very good. No breakout yet, weekly basis, but we're going to keep an eye on it. And again, it allows us to divine if this market is going to rally on hope, or are we seeing true weakness in copper, in soybeans, impacting adversely the American economy. Thereby, you want to think twice about your position sizing to the long side if you're so inclined to be long on the markets, and allow that to influence you. Not the headlines, please. Not the headlines. Last night, huh? Okay. I didn't see that. I missed it. Thank you for sharing that. Thank you very much. Hey, RL. All right, so let's go to the stock market futures. Back to the 4-hour chart. Members, over the weekend, we're going to talk about the weekly charts, daily charts of the S&P 500, all the major indexes and sectors that will be coming out tomorrow. Now, this morning, we have the S&P futures rallying. We're up over a half percentage point. The one issue that I do have here is that we have stiff overhead supply. So while we can press higher, no doubt about it, we will meet resistance maybe at the 10:30, after 10:30, after that first hour of trade. So the S&P 500 is looking good. We may get a later day pullback. That doesn't mean you go selling your stock unless you're a day trader. Now the NASDAQ here is pressing higher as well. We're up over a percentage point. A big rebound here on the NASDAQ. So you're seeing money rotate into beta, high volatility stocks. Shorts are getting squeezed. Probably some institutional money as well. Okay, so they're ratcheting up tensions. And this is what we always talk about. You know, oil prices go under pressure. Patrick just threw in that there were 2 missiles hit. This is a follow-up to RL's post. Two missiles hit an Iranian vessel. And this is how they keep a bid under oil. Because remember, I say this constantly to members. I'm going to say it for the benefit of everyone who hasn't hit that like button. Please hit that like button. The environment that we're in right now, we are in election season. We've been in election season for the past several months. You may not realize it. You're going about your day job. This is what I do. I just focus on news, politics, Wall Street, what they're doing, and watching their actions in addition to what they're saying. And you have the frackers that are the job hub, the high dollar job hub of growth in the United States, and they pay big money. And they are core President Trump constituents. The last thing he wants is weakness in oil and layoffs in that sector, because it'll have a ripple effect throughout the entire economy. And also, if the frackers go down, think about who finances the frackers. It is the junk bond market. And the junk bond market will decline in correlation with the frackers. So that's why when you watch the chart of the XLE and the junk bond market, they trade in tandem. When one goes down, the other goes down. So, and when the other goes up, each go up. So it's very important for them to keep a bid under oil. I'm not surprised about these false flag attacks. Will it result in a war? I don't know. I don't think anybody wants that war. I mean, Iran is a beehive of problems if we decide to get involved there. And I don't think that President Trump has the appetite to do that, to have that kind of a war. I mean, that's going to be mass casualties. And I hope we don't send our sons over, and daughters now, unfortunately, to that type of war. It's going to be horrible. Horrible. All right, so moving on. Thanks for the input, guys. I had no idea. That's the value of being live here, so thank you very much for the input. Let's take a look at the Russell futures. Wrong chart. Now, the Russell futures are up. Now, we are currently long of the Russell. We're using the TNA, the leveraged ETF. I would encourage you not to go chasing it. You need to wait for a pullback, because we're looking to add more. Either we're going to get a pullback, a nice setup, and a continuation breakout, A, or B, we're going to recapture a support level, watch for consolidation, and then we'll buy on a continuation move higher off of a retest of that support level. At current, we have resistance level above. We want to see a recapture of those resistance levels, which then should act as support. What I want to point out here on this 4-hour chart is that you have a very, very tight set of Bollinger Bands, and you're seeing the upper band widen out. Sexy stuff. That's good stuff. So the Russell looking good this morning. If you have any symbols that you want me to go over, folks, we have a couple of minutes. I'm not going to go too long today, but I'll defer to the symbols that you want me to go over going into the trading day and the weekend. And we'll be discussing our positions tomorrow with members, and our deep dive of watch stocks with members tomorrow on the week ahead commentary. If you're interested in becoming a member, click that link below, 14-day free trial offer. And with silver and gold level memberships, you get a membership to TrendSpider included with your membership. You don't want Trend Spider? Get the lower price titanium level. I just introduced it not too long ago. Titanium level. And it's very reasonably priced. So please join us. The pound versus the dollar. Okay. Look at Trent, pairs trader. Love it. Let's bring that up. It may take me a second to find it. I found it really quick. Good. Whoa. Whoa, the pound is ripping versus the dollar. Whoa. Very, very overbought here. On a short-term basis, the dollar's weakening here really, really bad. So let's go back to the dollar really quick, and I'll return to the pound. Yeah, we're off the lows of the session. We're very extended here on the pound. So what this tells me, on this 4-hour chart anyway, this is really nothing to write home about longer term. But on a short-term basis, we're probably going to get a pullback fairly soon on the pound because, and that means strength in the dollar, which does not bode well for my gold mining trade because we're so extended on this chart. I mean, we're dancing on top of the third standard deviation Bollinger Band. Let's pull back some. We'll take a look at a daily chart. So the daily chart looks really good. And what we're seeing here are the Bollinger Bands, which are very, very tight. Not like this widening formation. That's just not good. You want to watch your Bollinger Bands form a nice neck, and a really nice tight channel. And then you look for a break. Ideally, if you're looking to get long to the upside, this upper band, you can see it being influenced higher right now. Oh, good. So the jawboning a deal higher. On the UK side, Boris Johnson, huh? Interesting. Because he's playing real hardball, and it looks like he's doing a good job, unlike Theresa May. Any folks over from Great Britain on today's live stream? I know we had one last week. Welcome, of course. And I sympathize with what's going on with you folks over there. So the pound is looking good on a daily basis, a little bit overbought on a 4-hour basis. Let's go to a weekly view, get that higher level view, where we've been, where we might be going. So it's looking very, very good. The pound, for a currency that is under such pressure due to Brexit concerns, you're seeing price action since August, which has been very nice. Let's get rid of this. All right, let's start from scratch here. We have higher lows. We have a breakout on a weekly basis. So the pound is looking very, very good from a higher level view. That weekly view, daily view, a little bit overbought on a 4-hour basis, but if you're a longer-term investor in the pound, it looks as though you have a trade that's setting up very, very nicely here for the longer term. Now, the time to get really bullish on the pound is if we clear the highs of the week of the 16th. That would be a higher low and then a confirmation breakout to a new higher high. I hope that answers the question, Trent. I want to take a quick look at, if you have any other symbols, folks, you want me to go over, I'll go until about 5:30 a.m. Eastern Standard Time. And I want to bring up a news article that is concerning. After unveiling, not QE, I love that. Not QE, Fed eases liquidity rules for foreign banks. Are you serious? All the Federal Reserve is an enabler. If Deutsche Bank is that weak that the Federal Reserve, a U.S. Agency, not an agency, I'm sorry. Wow, what a mix-up that was. The Federal Reserve is not an agency. It's a private entity. And for a private entity, in essence financed by the United States taxpayer, to have to bail out one of the largest banks in the world and domiciled in one of the richest nations in the world, being Germany, is just absolutely, it's just a smack in the face. So it's horrible that the ripple effect here is this, is that they're putting, they're alleviating tighter capital controls on Deutsche Bank, which just allows them to do more dirty stuff. And it puts more stress on U.S. banks. And God forbid this bank ever goes down and the Germans don't support it. Well, guess who has counterparty risk to Deutsche Bank? Other U.S. banks. And if the other U.S. banks have counterparty risk and are under threat of going under, in essence, we, the American taxpayer, have to foot the bill. Just as we did 10 years ago. It's happening all over again. It's just amazing. They really need to audit the Fed. They really need to. Here's an overlay of the chart of Deutsche Bank. Let me blow this up. An overlay of Deutsche Bank relative to Lehman Brothers. And this Deutsche Bank chart has not recovered since the financial crisis. Ever. It's just an absolute basket case, ongoing concern issues, and we the people are the backstop for a German bank. Talk about being suckers. Horrible. And with that, I'm not seeing any other symbols come through. Folks, everybody have a great remainder of your Friday. May it be profitable. Have a great weekend. Please click that subscribe button. And I will talk to you over the weekend, and be well.